He also forced everyone, small and great, rich and poor, free and slave, to receive a mark on his right hand or on his forehead, so that no one could buy or sell unless he had the mark, which is the name of the beast or the number of his name. Revelation 13:16 through 17.
Here, I think it's possible that at some point we could pay with a chip in our hand, like an implant.
A digital identity that is linked to all of your records, healthcare, financial, criminal, biometrics, every product that you have come into contact with, every interaction that your RFID chip has had with other RFID chips. All this information will be studied by artificial intelligence. If you are an enemy, your bank accounts will be shut down. All means of transactions will cease to exist.
Failed out Wall Street, Lehman, but Morgan Stanley was ready to fail, Goldman was ready to fail, etc. In 2018, 2019, sooner than later, who's going to bail out the central banks? The problem has never gone away. We just get bigger bailouts at a higher level.
The Fed bailed out all of the banks responsible for the financial crisis. Those debts were added to the Fed's balance sheet, but who's going to bail the Fed out?
But now we live in a world where computer networks can do that same work algorithmically without the need for an intermediary person. And the ability of somebody to do that by algorithm, algorithms don't commit fraud. They don't make mistakes. They do whatever the programmers told them to do. And algorithms can do that for free, whereas banks require being paid in order to show up and do that work. All of those macro trends suggest to us that over time, many of the functions that banks currently charge a fee to provide will be automated.
The reckless monetary and physical policy that is going to set off a chain reaction proving that humans are incapable of discipline and that we are going to need to code discipline into monetary policy.
What's bigger than the central banks? Who can bail out the central banks? There's only one institution, one balance sheet in the world that can do that, which is the IMF.
Ripple and the IMF is an interesting pair. The next financial crisis, I predict that the IMF is going to be responsible for bailing out the world, and I predict that the connections that Ripple and the IMF have had in the past will surface. They are going to utilize digital assets for this bailout and utilize Ripple's escrow function for the SDRs. That money can no longer be inflated at reckless levels. It will be set by code and distributed as written in the code. Each month, a certain amount of value is released.
With the G20 endorsement of the roadmap, we'll start to implement an ambitious multi-year program. The CPMI will be intensely involved across a number of work streams. We'll take the lead in those areas that are at the center of central bank's mandate in payments, clearing, and settlement.
But we also see the potential that they have for making the global financial system more efficient and more inclusive than is currently the case.
Crypto assets are a benefit. In October, the G20 is going to release a roadmap and give guidelines on the rollout.
On stablecoins, I've just highlighted a couple points here from the report. The design of global stablecoin arrangements requires sound legal underpinning in all relevant jurisdictions, adequate governance, comprehensive risk management, encompassing all relevant functions as appropriate. The possible next steps in the roadmap will be implementing internationally coordinated regulatory, supervisory, and oversight approaches to global stablecoin arrangements and clarification of legal treatment in all cross-jurisdictional contexts in all relevant countries.
What she is saying is that the international regulation is going to be set. They're going to give clear guidelines for their nations that will use the global stablecoins.
We need to start thinking now about how do we make it safe for banks to participate in those networks so that banks remain relevant and so that we can maintain supervision of safety and soundness as the world decentralizes. And by the way, we don't think that's going to happen in 5 years. That might happen in 20 years. But what we do know is our international competitors in places like Europe, in places like Singapore and China have already adopted frameworks for crypto and for blockchain technology in their banking systems. And so my view is we're a little bit late to this party.
Brian is pushing the United States to update. This is going to happen in preparation for the G20's October roadmap. He states that this will happen in the next few weeks, right before the October roadmap.
So these are things already occurring. We need to speak to those sooner rather than later. I doubt it'll be months. It'll be more like weeks, I think, when we start speaking to those issues.
Definitely some of these individual building blocks, which can be implemented both quickly and regionally, and we can see what we call some quick wins. But the overarching frictions and failings in cross-border payments really need a more comprehensive plan in looking at standards in APIs and ISO 20022. So I think the answer is it's going to end up being both, but we're going to find the most benefit when we can do all of them.
Cross-border payments needed immediate attention. It is the biggest pain point, and this is what Ripple and XRP solves.
Re-up, but that means there's dormant capital sitting in almost the engine that is correspondent banking, the engine that is international payments. Any engine needs oil. The oil that exists in international payments is that pre-funding. That pre-funding represents $10 trillion of pre-funded, just kind of dormant capital sitting there to grease that engine. If we, as what Ripple's trying to do is if we can make that 10 billion down to 9 billion down to 5, you've massively made the global economic engine more efficient. You can take that $5 trillion, going from 10 trillion to 5 trillion, and you can reinvest it in all kinds of stuff, whether it's, I mean, you could do dividends, you could do working capital, you can hire more people, you could, fill in blank. That's just good for everybody.
It's a win-win situation for the G20. Everyone can agree on freeing trillions of dollars.
I want to make sure that we move fast enough to put a framework around that. So again, we've seen our first letter on crypto custody. Expect over the next weeks and months that you'll see some additional commentary on things like payment networks around blockchain, on things like stablecoins and the rules for reserve accounts backing stablecoin projects, and other things. But my personal view is this stuff is not a fad. The market cap, which is nearly $400 billion today, is real. And we need some framework and parameters so that people can participate in this in a safe way.
This is not a coincidence. Brian is getting us ready for the G20's roadmap.
As I said, a lot of jurisdictions are looking into CBDCs and increasingly more, but they all have very different views on it. There's quite a lot of work going on. Actually, here also at the BIS Innovation Hub is hosting a CBDC Coalition of the Willing or working group. And we've got a number of central banks around the table talking about their experiences, their pilots, their ideas with CBDCs. It's a collaborative culture we're finding, not a competitive one. Central banks want to learn from others, and there's going to be many different types of CBDCs that could be developed. What I think would be, in my own personal opinion, what I think could come first is a wholesale CBDC. So one that basically banks can use to settle with each other. And that CBDC could be either a domestic one, or it's possible that such a wholesale CBDC could also be used among central banks.
Interoperability is the name of the game, and this is what Ripple is experts in. XRP is designed for wholesale use between banks to interact. It's not a retail currency. Everyone is working together for the Internet of Value. Watch it get built.
Well, the issue that we have at the moment is those businesses are still in growth, so they need capital to survive. And if they're lenders, they normally seek that capital from the wholesale markets. In the global financial crisis of 2007 and 2008, there was a huge liquidity disappeared, capital froze. There wasn't any. Nobody knew where the money was. All they knew was there wasn't any. And so everything ground to a halt. This time round, this crisis is somewhat different. A, it's a medical crisis. B, the banks are well capitalized, so they do not have a liquidity issue. What's happened, though, is the wholesale market that the alternative market use has dried up, and costs of finance in that area have gone through the roof. So if you're an alternative lender looking to provide support to small to medium-sized businesses, you could be faced with a wholesale market cost of 10% for the money that you want to lend. And by the time you've added your costs on board for that and the servicing costs, you're looking at about 16 to 18% for a loan to support a business. Well, that doesn't work.
The crisis is in the wholesale market. That happens to be where XRP's utility comes into play. You can use XRP's liquidity to dump fiat for fiat.
The IMF actually prints their own money. The SDR, the special drawing right. SDR is not strawberry daiquiri on the rocks. It's a special drawing right. It's world money. That's the easiest way to think about it. They do have a printing press. And so that will be the only source of liquidity in the next crisis, because the central banks are not, if they don't normalize before the crisis, and it looks like that they won't be able to, they're going to run out of runway, and they can't expand the balance sheet beyond a small amount because they'll destroy confidence. Where does the liquidity come from? The answer is it comes from the IMF.
What if XRP is used on the macro scale to deliver SDRs to the nations during the next financial crisis?
But just on the topic of crypto assets, I think it's fair to say that the fund has taken a somewhat more balanced view towards them than some other commentators have. I think, we first of all recognize that each country has to decide, how it wants to approach crypto assets, whether they think they're good or bad.
There is plenty of proof to prove that the IMF and Ripple are up to something.
In a time of enormous blocking and tackling, and it does show how important robust bank infrastructure is in delivering benefits in these kinds of times. And so, you hear people talking about, an economic crisis that could turn into a financial crisis. What I say is it's critical at the OCC that we make sure the banking system is strong, because we've never needed it more than we need it for these programs.
This crisis, we need to have the banking system updated. This is the perfect opportunity. The next stimulus is going to be the catalyst for digital assets.
Anything's possible. And I think we'll see many, many different types of design. Let me just close on one point, and that is that in the building blocks, the very last one, 19, is about an international considerations about CBDC design. And that element is focused on thinking about interoperability if and when jurisdictions decide to issue a CBDC. And that's a whole nother issue, and that's also quite complicated. It gets us at those issues that Christian had noted earlier on different standards, regulations, rules, and cultural views.
The standards are being set for the Internet of Value. All nations have agreed and are updating their regulations. Brian is updating the US's. Remember what Bob Way has said: when two central banks choose to atomically swap assets, it's game over.
My reaction anytime people ask me about kind of competitive networks, we're trying to create interoperability between networks. We call that Ripple Net. I don't view that as a closed network, meaning, it isn't, I don't view myself as a competitor to PayPal or Alipay or Paytm or fill in blank. I think about it as like, how do we become the TCP/IP of an internet of value? Our whole mission, if you look at internally at Ripple, our vision for the company is to enable value to move the way information moves today. And so when I think about these different networks, what I'm thinking to myself, and I hear some of those that I hadn't heard of, what I'm thinking to myself is, okay, wouldn't it be great if all of them were interoperable?
And they will be. The nations have to make this happen first. They're in control. Everyone else will build off the infrastructure that they have built from the bottom up.
This goes back a little bit to the Geneva report that we wrote last year, where we asked whether, have we seen the death of banks? And what we concluded in the report was no, we don't. Banks are able to innovate just as well. They've been slow to, in a sense. A lot of banks have legacy systems. It's expensive to update them. Technology companies like Libra and Facebook are much more nimble at developing technology. But banks are coming around. They recognize they need to keep up with the technology and offer their customers what they want, which is convenient, fast, safe, efficient solutions to make payments.
The banks are not going anywhere. The banks are going to oversee the Internet of Value, the police, so to speak, the on and off ramps of the IOV.
Well, let's unpack a couple of things you've said, Rachel. So the Fed is working on a project that will be ready in 2024. Let's just pause on that for a moment. 2024. Today is 2020. The United Kingdom already has a real-time payment system in 2020. And America, the leader of the financial services world, will have it in 2024. I think that's unacceptable from a competitive standpoint, right? This country is a leader in two industries in the world at the moment, financial services and technology. The idea that we're going to allow Singapore, China, the UK, and the EU to leapfrog us in terms of faster payments, much the way that other countries got 5G telecommunications long before we're ever going to have that, should give us pause. It should really give us pause. And so the question I have is, when real-time payments technology is available today in the form of private blockchains that already exist and are transacting $350 or $400 billion of market cap every day, I guess I ask myself, why do we want to wait for those things?
This country has had positive interest rates for the longest. We decided when this was going to happen and we were in no rush because interest rates were still positive. Now that the COVID crisis has brought it to near zero, we have nowhere to turn but to go to the internet of value.
I wouldn't disagree with anything you said, Christian. I thought you said in 3 years there was going to be a multi-currency Libra, and there may be, but there may also be a CBDC on the network. So in 3 years, I share many of Christian's views, but I also think that we're going to see some wild and radical technologies appear. I think it's possible that at some point we could pay with a chip in our hand, like an implant. I also hope to see lower cost, faster, more transparent, and more accessible payments. I think that the broad set of institutions that exist now will continue to exist. And I think we'll see a number of new players also come onto the market with different types of technologies that we haven't even yet thought of.
The technological evolution is here. Ripple concentrated on the most simplest use case and perfected it. All other technology companies are going to build off the underpinning of the TCP/IP network that Ripple has set up for the Internet of Value.
This calls for wisdom. If anyone has insight, let him calculate the number of the beast, for it is man's number. His number is 666. Revelation 13:18.
Thank you for watching and subscribing. If you enjoy my content, please consider joining my Patreon.